All right. Hi, everyone. My name's PK, and here I've got Troy Daly with me. In this video, we'll be going through about how Troy and his partner bought a fantastic investment property in Adelaide. Real quick, the details are purchase price 407,500. The yield is just around 5%, so the rent is about 400 a week. So positive cash flow, tick tick. It's subdividable, and you would not have got this property at this price if it had been on domain or real estate. So it was off market, which I just came to learn literally 2 minutes ago, which is always good. Put a smile on my face. So obviously, guys, like, let's not beat around the bush. We're going to be talking about the property investment accelerator, but I would love it if you stuck around because we're going to be dropping some value bombs, how Troy got it off market, how he got a subdividable property, how he identified a suburb that hadn't grown too much, and how he did all this. I'm in Brisbane, Troy's in Brisbane, how he did all this interstate without needing to catch a flight or needing buyer's agents. And we might go into that a little bit cheekily as well. So stick around and hit the subscribe button, all that normal stuff. And Troy's a really good guy. So you're going to get, it's going to be an exciting interview. So thank you so much, Troy, for making time. And before I ask you the first question, I just wanted to say, and I didn't say it to you yet, but thank you to you and your partner for trusting me back, so many months ago. I remember that phone call. I appreciate it a lot.
No worries at all. Thanks for having me.
Cool. Let's get into it. So I don't know how much you're comfortable sharing, but maybe just paint the picture of who you are for everyone who's watching. Like, you're obviously in Brisbane. What do you do? What did you do? What's your
Sure.
kind of life situation?
Of course. So when I actually started the course, I was in retail. I was a sales, just retail sales at a skate shop. I knew I wanted to invest in property, but there's a lot of mixed information. I wanted to, I guess, narrow down and figure out where I wanted to invest, how I wanted to invest, come up with a bit of a strategy. That's when I stumbled across the Facebook group many, many months ago, probably 12 months ago, actually. And through there, I figured it out. The course is actually available and it was a thing. Got in touch with PK through the course, actually identified that being a buyer's agent was actually a thing. I had no idea that they even existed. Since then, I've actually become a buyer's agent here in Brisbane, which is pretty funny. But no, loving it, absolutely loving it. So that's sort of the story of where I am when I started and where I am now.
Yeah, perfect. And so I guess the question is, you stumbled upon the Facebook group and you were like, if you don't mind me saying, you were like, green behind the ears, right? Like brand new. I remember that initial phone call. Like no one wants to be scammed. No one wants to be taken for a ride. All the questions that I had when I was starting in property, you had as well, you and your partner. Like what kind of got you over the line before we get into the details of the deal and how you got the deal? What got you over the line to actually build that trust um and like invest in me essentially?
Good question. I think probably because what you were teaching and what you were adding value to people wasn't your standard cookie cutter property investing advice. It was different, which I guess made us a little bit more worried in the beginning. But I was speaking to family, speaking to my mum, and she's like, look, do it. It's what you want to do. You want to buy a property. He's got thousands of people that recommend him, follow him. What's the worst that could happen? And I was like, you put it that way, why not? Let's do it. Then we jumped in, and here we are.
Yeah, I'm glad you did. So let's sort of get into the details. I mean, most property investors, you know, they don't even end up buying a property, even if they want to, because of fear and lack of education. What to speak of buying 5,000 miles away from where they live? It's pretty amazing what you've done. Like, let's kind of call it for what it is.
Yeah.
Just what tips or what tricks can you reveal or can you teach people that are watching right now on how to buy interstate and actually build the confidence to do your due diligence, make sure the photos aren't fake online, all that kind of thing with the real estate agents, have that relationship, how to actually do all that without catching any flights, given you had never invested or bought a property before in your life?
Yeah. I think it all comes down to relationships, not only with agents, but also your team in general and the team you want to build. Property managers to help you along the way as well. they're going to be on the ground inspecting the property for you. And you touch on this in your course.
Mm.
But yeah, certainly relationships with agents, they're going to give you access to things that aren't necessarily going to be on REA or on domain. And I think being honest with them around what your, not necessarily goal is, what you want to get in a property, whether it be 3-bed, 1-bath, 3-bed, 2-bath, whatever the case is, they'll keep their eyes open for that property to pop up. And it was actually funny. Paige's parents were like, are you going to actually buy a property that you've never seen? And I was like, and to add to that, we're going to buy a property on the other side of the nation. And they're like, why? And I guess trying to educate people that have the mentality of buy your own home, smash the mortgage down, that'll get you to financially free. I was like, I want to do things a little bit different, and I know it's going to work because there's evidence out there. And if I back myself and Paige backs me, I know it's going to happen. So yeah. The biggest tip is relationships, 100%.
Yeah, no, for sure. And you're very lucky, I would say, that you have a partner that backs you, like you just said. That's like half of the hurdle kind of, overcome, which is really good to hear. And so Adelaide is like, right now at the time of recording, it's probably the hottest property market in Australia. It's growing like so quickly. In fact, it's hard to buy there. Like I would actually say it's hard to buy a property in Adelaide, not, much less one of these suburbs that are just booming through the roof. You found this one on the north side of Adelaide that hadn't grown as much of its peers around it. How did you find the suburb? Like what gave you confidence that this is the right suburb? Because, everyone has an opinion of where to buy. What gave you confidence? And then I want to hear the story that you haven't shared with me yet about how you actually found this property, because very interesting story, apparently.
Yeah, no, it is interesting. But originally I was looking in, I guess, the northern pocket for quite some time. And we offered on probably about 10 properties along the course of until it came up to buying ours. And then I was like, let's actually just give it a second. Let's revisit the suburbs. And at the time we're looking at, I don't want to mention them, but particular suburbs. And I was like, surely as people get priced out of here, they're going to look further north or further east, wherever the case may be. And there was a little suburb that just wasn't getting the attention that others were. And lo and behold, that's what we bought. And we managed to score it off market, which was awesome. Now, the story about it is the agent that we bought the property from, I actually bought a property for his grandma here in the Sunshine Coast. So that was... You did? Yeah.
Oh,
so
nice.
my principal and I bought a property in Coolum for her. And then off the back of that, we just stayed in touch. And then there's one day, he's like, I've got a property in X suburb. Would you be keen? And I was like, it ticks every single box. When can we buy it? It was pretty much the conversation. It was actually funny though, because the owner was a little bit unrealistic around price initially. He said to us 450. I was like, there's no way. We're not your buyer, unfortunately. We left it. He then came down to 430. I was like, if he's willing to drop 20K in a day, surely there's more in the tank. Again, left it, just allowed them to come to us, and then sort of negotiated at that 410. Then after building a pest, managed to get a further 2,500 off, which was great.
That's really good. And for everyone who's watching, I want you to really connect with that point of patience. Of course, you said that you kind of almost are on the brink of giving up, but if you are, like, you've got two options as a property investor. You can either buy in a cooler suburb where the data is trending well, but it's not quite where we want it to be. And you'll get the growth, but the growth will come 6 months later, 12 months later, but it will be easy to buy. Or you have the option to buy in a red hot suburb where you're going to get the $10,000 gain every single month from the moment of purchase. But the downside is going to be incredibly hard to actually buy, because everyone wants to buy. That's the definition of a hot suburb. So it seems like you started off with, wanting to buy in a super, super, super hot suburb. You were missing out, but then, using the mentorship, everything else that we've talked about, you kind of shifted or pivoted to say, all right, well, I'm okay not to have $10,000, $20,000 of growth every single month, but let me at least get into the market. And then I know it will come. And it is coming. We know this in those sort of middle to outer ring suburbs on the north side of Adelaide. We're not going as far out as Elizabeth. But before that, the growth is, it's spurring on now. You can't I correct me if I'm wrong here, Troy, but if it was on market, if it was on real estate or domain, do you think you would have got this at 407,500?
No. The agent, even afterwards, I speak to him quite often. He's like, mate, that should have been 450 property.
There you go.
And you wouldn't even be able to get anything after building a pest because it would have been 17 other offers that we could have just fell back on. I was
Yeah.
like, well said. Thank you.
So this is a great thing. And look, credit where credit is due. Troy, you're a buyer's agent and probably a very good one. Relationships, whether you're a buyer's agent or whether you're not a buyer's agent, you have to work the phone calls, right? It's not a
Yeah.
part-time job or a full-time job, but you need to establish relationships. Not hard, but that's what you need to do to be able to buy in these super hot suburbs and get stuff off market. And Troy, you mentioned that it was subdividable. So you're like brand new to property investing, but you're already buying properties that have subdivision potential. Like, just walk me through that.
Well, we work with a lot of developers at work. So I sort of understood, although the zoning and code is different down there, I sort of have a rough idea of how to tackle it, look at FISOs every day. So that sort of is like, I think we can do this. We'll wait until it actually stacks and pull the trigger. Yeah.
So why don't you probably know more than most of the listeners or watchers of this video. Why don't you just take us through, maybe I can learn a thing or two as well, how you identified the fact that it was developable, A, and the steps that you went through or you'd go through to identify that it's profitably developable. Because you can buy 1,000 square meter block of land, it's subdividable, but that doesn't mean it's profitably subdividable. So how should one, in your shoes, who wants a growth suburb, positive cash flow, buying off market, how should they go about trying to find that fourth aspect of the diamond property that it's subdividable?
I think getting in touch with the local council and just speaking with them around what a property needs to be to tick the boxes to be subdividable. In Adelaide, 18-meter frontage, 600 square meter block is what it is, or at least it was 2 months ago when I checked. And it's actually funny, I built the relationship so well down there. I actually had a town planner's direct number for Salisbury Council. So whenever I had a query, give her a call, get on the phone, just ask the question. I actually had a bit of a heart attack when it came to going unconditional. My conveyancer said, there's actually an easement on the block we didn't pick up on earlier, but it's Crown law for housing SA. So they were saying 30, 40 years ago, subdivision company pretty much subdivided all the blocks out there and then put an encumbrance on the block, which didn't enable you to subdivide any lower than 600. And I was like, well, there goes that. There goes my fourth box, if you will. But then I contacted Housing SA and said, hey, look, I'm purchasing a property in X. However, there is an encumbrance. And he pretty much says, look, ignore that. We get those come across our desk daily. We literally sign them off and send them on their way. So ignore that. I was like, thank goodness. But there was a little bit of, what's the word? Bit of a heart attack in a way. I was like, well, one of the biggest reasons we purchased it is because of the subdivision potential. But moving on to when something is like feasible or stacks, trying to buy something at the moment that is feasible and stacks is really, really hard. Initially, straight off the bat, it's doable, but it's really, really tricky. A lot of the time, developers will buy something, or at least us, we're not developers by any means, but we're buying for the long term, knowing as property prices increase, we're already seeing it already, something on a 300 block just sold for 450 or 460. So as soon as those numbers make sense, we see the margin that we're after all costs included, including subdivision costs, knocked down to the property, services connected, things of that nature. We'll then start talking about it. And by then, fingers crossed, building costs will also decrease because obviously those are sky high at the moment too.
Yeah.
But I mean, speak with developers every day. I literally had a phone call with one earlier. We bought a property for him in Maruka that you could subdivide with city views. And he's like, does it make sense to sell the land as is or should I do the build? I said, it makes almost a 15% difference if you do the build. Ran into the fee zone. He's like, okay, awesome. So it is a numbers game. It's literally what property investing is. It's a financial game. And if you understand that, you're pretty much fine.
Yeah.
Yeah,
Amazing. Amazing. And I think the other thing is, you, like you said as well, you don't have to subdivide straight away. You know,
correct.
it might not be commercially viable. Maybe the margin, the developer's margin's like 15%, 16%. You might want to wait 2 years to creeps up to 20%, and then you pull the
Yeah,
trigger.
yeah,
Um, that's really good insights. And just while you're saying all that, you know, it's just I've it's kind of sound weird, but I'm like super proud of you, because it's like even the vernacular that you're using is is completely different to our first phone call.
yeah,
I'm so
yeah,
happy. You're set up. Like maybe one or two last questions. You know, you're super young, Troy. Used to work a retail job,
yep.
as did I, many times before. You know, we kind of have to hustle in our early years. What's the kind of advice that you would give to other people, who are maybe even in their late teens? You know, I think my youngest client 17, or in their early 20s, mid 20s. You know, they see this kind of housing affordability crisis, and they kind of resort to the fact that they'll never get ahead financially. Whereas you were the opposite mindset. What's the kind of advice, practical tips, or advice that you would give to someone who's not on a huge income? It's not like they're on a 200K income, but wants to get ahead.
Um, there'll always be suburbs, no matter the price point, that you can invest in, but also don't listen to dream crushers. There'll be people out there that'll be like, don't invest in property. It's, you know, it's bricks and mortar decaying in the sun, costs too much money. There's a lot of people that will pretty much just hone you and say, don't do it. They'll say, put it in stocks, put it in X, Y, and Z. It's a much better way to do it. And in some ways, I agree. But there's a difference in investing in a property. It's a lot more secure. You look at the trend line, it's constantly been going up for many, 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 many years. But the biggest thing I would probably say is just learn to save your money, in the sense that just because you get paid $1,000 doesn't mean you need to spend $1,000.
Hmm.
Just learn to be a little bit more sensible about it, and then just put it somewhere that you can't necessarily touch it, or touch it easily, whether it is in a, you know, index fund, or wherever you want to put your money. And then over time, when you get to the point, make sure you're liaising with your mortgage broker. As soon as you have your deposit ready, pull it out, buy, because instead of timing the market, timing the market is what matters. And I'm probably, yeah, you probably hear that literally every single day. But it's a saying that I love.
Yeah.
So yeah, just, there'll always be a suburb for you to buy in. Don't get caught up on people saying housing crisis, you'll never be able to get in. How are our kids meant to buy? You'll be able to buy.
Yeah.
No stress.
Such refreshing advice, you know, because we have this concept. Brisbane's still affordable, yeah, where we live, but Melbourne, Sydney, you have this concept that housing is just too far gone. Probably Brisbane as well. In 5 years' time, it'll be like that, median value well above a mil. You know, there's no way, but there are always suburbs. And, you know, you can't get that place in Ascot, or you can't get that place in Bulimba in Brisbane, you know, straight out of uni. You got to build up your asset base. Do that outside of Brisbane, do that in regional areas or other capital cities. And then you will have, you know, if you're disciplined, and if you know, the stars align as well, you will have the wealth to buy that place in Bulimba, if that's your goal.
Yeah. And it's actually funny because the biggest issue we had was identifying the suburbs. We're like, how we wanted to buy in our backyard, but we knew it wasn't the right decision. Well, after doing your course and listening to many others, they said, don't buy in your backyard, look for other suburbs. And I was like, how am I meant to identify other suburbs that have legs or has the potential to grow? But what you teach is yeah, almost priceless. So yeah.
Yeah, and I'm not paying Troy
No,
anything, by the way, guys. In fact, he paid
no,
me.
correct, correct.
um, all right, and you kind of like answered the last question, but the question was gonna be like, just truthfully, like with no BS. You know, like the course is not cheap. You know, it's, and especially not for a sort of young 20 something. Did you think it was worth it? What would you say to someone who's sort of on the fence, thinking like, this is my deposit money, why am I going to give, you know, $5,000, $6,000 on a course mentorship program, when that same money could get me, you know, a little bit of a better house? That's my deposit money. What would you just say to someone who has that mindset but still has no idea where to buy, what to buy, how to buy, everything that you've achieved?
Yeah, I think that $5,000 to $6,000 invested into the course would be better off than investing into a property that it will be a lemon, almost. Like, to put it bluntly, sure, it may be your deposit and you may be able to buy now with it, but extracting that 5,000 to 6,000, investing in yourself, identifying how to invest, where to invest, yeah, like I said, should be more than 5,000 to 6,000. I'm glad you don't charge more, otherwise we wouldn't be having this conversation. but no, it's good. But yeah.
Yeah, no.
Hopefully I
Thank
answered
you.
the question. But
Yeah, you did.
but no, it's a great course. People that are out there that are on the fence, just do it if it makes sense. And if it doesn't make sense, just hold off until it does.
Yeah. No, that's absolutely right. Get educated. There might be a chance that you can do it yourself. Give that a crack first. I'm sure you gave that a crack first as well, Troy, you and Paige. But if you can't do it and you want to do it, then the value proposition just stacks up. It's a no-brainer.
Yeah, exactly. I've got literally books full of property stuff, and then what you taught in your course pretty much cancels out the books. So,
okay.
Yeah.
All right. Awesome.
But again, you're not paying me to say that, so.
No. And just a sort of a shameless plug. You didn't ask for this, Troy, but I'm kind of proud, even though I speak so much about not needing a buyer's agent, and I hang my reputation on that for investors. There are some people that have zero time in the week. Like, if you have some time, 4 or 5 hours a week, you don't need a buyer's agent. That's my firm opinion. I'm saying that in front of a buyer's agent. But if you don't have time or interest, then don't come to me. Go to a buyer's agent. And Troy is like, I'm super proud because it's a really good example of someone who's sort of, you could say, knew very little about property investing, educated himself through free sources, then did my course mentorship program, is now a property investor and also a buyer's agent focusing on Brisbane. So, and just so everyone knows, you did not ask me for this, but if you are interested in getting Troy's services, you can just comment below. I'm sure he'll reply to that or something. But yeah, I just wanted to be completely impartial and just express how I think we have like 40, 50 buyer's agents through the course now. And that's actually something I'm quite proud of. Awesome. All right, Troy. Well, thank you for making time. Just to reiterate, but through the course, positive cash flow, high growth, under market value, off market, and subdividable, interstate, without catching a flight, without using a buyer's agent. Hats off to you, sir.
Thank you, mate. Appreciate it. Cheers.
Thanks, Troy. Thanks, everyone, for watching. If you got value and thought that this was not BS, hit the subscribe button and give it a thumbs up. Just trying to bring authentic, real, raw value. Hopefully me and Troy did a good job. Thank you for watching and good luck in your property investing. Catch you later, guys. Bye.